So fixed odds or digital options, a far simpler way than traded options. Although some of you have heard of traded options and maybe a little bit complicated, fixed odds are based on the similar model, but much easier for you to trade. Good way to back short-term movements, seasonality studies. If you don't know what seasonality is, let's say for instance, certain times of the year might be strong or might be weak. You might have heard of the old saying, sell in May and go away. Well, that comes around from where the stock market traditionally is stronger in the winter months than it is in the summer months. In fact, between sort of October and May is where markets tend to gain the most, and between May down to September, which tends to be a bad month, it tends to be very weak. But you can back seasonality using something with a fixed odds bet. Easy to use system, and you can trade with small amounts. You can also trade with large amounts. Maximum risk is known. With a fixed odds bet, it's fixed. So if you risk £5, that's the most you can lose, and also you know what the maximum you'll make as well. You can adjust the parameters to suit your own risk. It's all done in real time, so you can tweak your bets, and it's always so here's the German DAX, and if we look at what the DAX has been doing, it literally just stays in a range. For trend traders, this isn't the sort of market we want to trade. In fact, this is the sort of markets that we lose money in. But with a fixed odds bet, with a barrier range, we can say that this market will stay in a range, and as long as that happens, you get paid out. Obviously, if it breaks out of that range or stays out of that range, then you're going to lose money. Here's another good example. Imagine it's a bit like a seesaw. You've got the euro against the pound, just stay in a range, doing nothing. Eventually it breaks out, which is fine, and you would lost money in your barrier range, but here you would have got paid out. So what it is, you've got the buyers and the sellers who are pretty matched, and nobody's really pushing the market one way or the other. So what we do there is literally, we say as it says, it stays in a range, and we can bet for that basically to just stay within that range. Support resistance levels. Support is basically a floor. Imagine what we just showed there about the euro and the pound. Every time it gets down to the bottom level, buyers come in, or certainly sellers are exhausted. And we can place a higher bet that the Wall Street or whatever index is, it's higher than that support level in the next 7 days or 10 days or whatever you want to bet. And this is an example. Now, remember what I said earlier about the copyright issues? They don't say Dow Jones, but it's the same thing. So the Wall Street index, I predict Wall Street index will be higher, or if I wanted, I can bet lower than a certain price, and we can put the price in here. In 180 days or whatever days period, you can bet anything from a minute to 6 months, I think even 12 months, and then we can choose how much we want to win. So in this case, £1,000, and then we'll get the price. So the system will give you a premium. So these are the factors, we can choose these, and we will then say how much will that bet cost. Well, in this case, it's just over £500, £500 and 19 pence, basically giving you 100% return. So if we want to buy the bet, we can just press on here. If we want to tweak the bet, we can change the parameters, and this price will change automatically. Now, just to be clear, your net profit, it might be a little bit faint, but I'll read it. It's £499 81 pence. So if you say I want a payout of 1,000, it's not 1,000 plus your stake back with fixed odds. It's basically 1,000 total. So your actual stake was 500 and your profit is pretty much 500. I just want to be clear, it's not that amount plus your stake back is included. So support resistance levels, say resistance ceilings occur, and we can place a lower bet that the S&P will be lower than a support level. So this is exactly the same what I've just shown you, but the opposite. So the US 500, which is the S&P 500, is lower than this figure at this time, and again, that's how much it would cost to place that bet, that's how much I'd win. Now, on this particular bet, it doesn't matter what happens in between. So say, for instance, the S&P 500 soars, your bet will still be live because it's a bit like an option. You've bought time value. As long as it comes back in the end to be lower than this amount, you'll still get paid out. So that's an interesting thing with fixed odds bets. You don't get stopped out on most of the fixed odds bets because you're buying a time value, a bit like an option. And as I say, ranging markets, you know, if we want to bet that the German DAX is going to stay between a certain range, 6,500 to 7,000, something called an in-out bet, or barrier range as I call them, is the correct tool to use. And again, here's a barrier range. So what we're saying, I predict that the Australian dollar, US dollar stays between, so we've got two figures now, so we say it's going to stay between this figure, the low, 97, and 101, the top, in the next 7 days. So as long as it stays within those two figures, we'll get paid out. Now remember, you know, Betonmarkets isn't a charity. If something is very likely to happen, what you call a favourite in sports, then your reward is going to be much lower. If something's very unlikely to happen, then your reward's going to be much bigger. And with fixed odds, we're always, you know, it's a trade-off between risk and reward. But this bet here is still going to pay you out 42%. Remember, in 7 days, that's pretty good, because you're making that return, and then once you've got that bet paid out, you can then place another bet, and so on, and you can compound your returns. So that's where, you know, fixed odds can be interesting a little bit here. And there's little video clips and gives you some examples. So let's click on Start Betting. Forex, obviously the currencies, indices, US stocks, UK stocks, commodities, there's only gold at the moment. Random walk, these are basically bets just based on random events, which some people find popular, but I personally don't trade. So let's just go to indices just to start off with. So I predict the German index, and if you drop this here, you can see, and all the markets that are in dark, they're the ones open, and the ones that are faded out, like for instance Singapore, they're closed right now. So right now I'm filming this in European time. So we've got all the European markets open, and the US markets are going to open shortly. So we'll just take, for example, the UK index, which I say is going to fall between, and I can set different times, you know, on dates all the way, you see, going out 360 days from now, or 7 days. So let's just go for 7 days. And the payout I can choose in dollars, pounds, euros, Australian dollars, whichever currency I want to have my account in. And you can have more than one. So let's just say in pounds. So I want to win £1,000. And you see how it's all scalable. £1,000, if this and this happens, so price this bet. So the price of this bet is £528, and that's my return. If I want to buy it, I just click here. And if I want to change any of the parameters, then, as I say, I can just change those in here as well. The in-out bets, and we say we can, these are our barrier ranges, so we can say I predict that the UK index stays between, or I can say goes out if I say something's going to break out of a range, but normally I'll say it's going to stay in a range. So if I say it's going to stay in a range of 5,900 and 6,100 in the next 7 days, which is a fair bit of a range, price this bet, and that's going to cost £528. So instead of saying the market's going to go up or down, what I'm actually saying is that the FTSE 100, the UK index, will stay in this range. And we can also bring up a graph, and we can see the actual where the market is right now. And in fact, it is sort of ranging quite a bit at the moment. So we just, we can bet that that's going to stay in a range. Now, the bigger I make the range, the lower the odds. So if I say 5,800 and 6,200, and you'll see it's repricing the bet now, you'll see price is too high. Yeah, so basically it won't price it because it's just such a certainty. Let's see if it prices that. Now you see this one here, the bet's going to cost me £800 to win 1,000, so 24% return. Still an okay return, but the reason why it's becoming, the premium, this amount is costing more, is because I've sort of set it quite a low risk. So that's quite a low risk trade. Because what you can do with fixed odds, you can take a risky trade, or you can also take fairly low risk trades. The problem obviously with a relatively low risk trade like this, if it does go wrong, your win to lose ratio is fairly out of your favour, because you're staking £800 basically to make £200. But that is quite But what I've done, you see, I've set it at 6,100, which is not even on this graph, it's right up there somewhere. And I've set the lowest 5,800, which is down here somewhere. So I've given myself a lot of margin, hence the return's not there. But what I suggest with fixed odds bets, read my little book, which you've got a copy. It's an e-book, it's an electronic book, which you can download. And start off with a virtual account, and then start playing around with real bets, because you can trade such small amounts. You might as well just go on with real. You can go down to £2, £5, but it's a good tool to have. Fixed odd bets are a good tool to have.